Good morning, everyone. Welcome to today's session. So today we are going to cover chapter number 17 and chapter number 15. We are going to cover a quick revision of chapter number 17 and 15. How will I structure this particular session? Basically, what we will do is we will start first with chapter number 17. We will go through with a quick revision. We will see the questions. We will, solve some questions from different sources for the chapter number 17. And then we will move to the chapter number 15. Okay. Now, the time ratio between both, like if I say chapter number 17, because it contains three different topics, it will take some more time compared to chapter number 15. So in the end, we will cover chapter number 15, but first the focus will be chapter number 17. Now, what is chapter 17 basically? Chapter 17 is on the due diligence, investigation, and forensic accounting. Now, these are the three distinct and different fields: due diligence, investigation, forensic accounting. All three are distinct and different fields, but still it is important to understand the distinction, what lies in these three, and what is the difference in these three. Okay. Now, quickly, we will go through, and while going through the session, I will refer to the study material. We will use the study material, wonderful drafted study material. So we'll refer that. I will highlight something. I expect you guys to take the note along with me so that at the time or at the day before exam, you can easily revise from the study material. Okay. If you have any doubts, you can post in the chat. I will take up as and when, I would be able to. Okay. So let's quickly start with the first part of the due diligence. Now, what is due diligence? If I talk about due diligence, if I summarize in one word, it is look before you leap. Okay. Due diligence means requiring a diligence, requiring thorough examination of any of the subject matter. In the corporate world, this is a detailed review, investigation conducted before major transaction, mostly commonly before a merger or an acquisition. Okay. So that is in due diligence. Basically, you look into the skeleton, into the closet to take out the details of that particular transaction. The objective is simple and practical, that to help the potential buyer to understand exactly what they are getting into. For example, if there is a deal going to happen that someone is going to buy the shares of the company, okay, due diligence will help that particular person, that particular investor or the shareholder who is going to buy that shares, that whether he should or he should not. So there are different forms of due diligence that we will see, but how due diligence is different from audit, we will also see that. Okay. So quickly, I will also refer to the study material over here. Okay. So first of all, let's understand what differentiate due diligence with the audit. Now, audit is an independent examination. Yes, due diligence and audit both are independent examination. However, the overall objective of the audit is to express an opinion on the financial statement, whether they represent a true and fair view of the books of accounts. So here it's an expression of opinion about the true and fair view of the books of accounts in case of audit. But when it comes to the due diligence, okay, it can be financial, it can be non-financial. Yes, remember, due diligence can be financial due diligence, can be non-financial due diligence. For example, tax-related due diligence. When you do an audit a full-fledged audit, okay, you check every area inside the audit. But when it comes to due diligence can be a specific subject matter also. For example, tax, for example, financial, for example, environmental, a lot of things are there. For example, labor related. So accordingly, due diligence audit is, more focused on that particular area or the nature of the transaction rather than focusing on overall books of accounts. Audit can be statutory audit, can be tax audit. Okay, various types of audits are there. Okay, But as of now, understand, audit comes from the requirement of law or regulation that, Companies Act, statutory audit, Income Tax Act, tax audit. When it comes to the due diligence basically based on the agreement or the transaction that is going to happen. So if Mr. A wants due diligence, he may hire, like, for example, Mr. P to conduct due diligence, okay, of the company, or whatever shares or transaction that is happening. Let's say XYZ Limited is a company, so he will conduct due diligence over here. Now here, this is an agreement between Mr. A and P. There is no necessity, there is no need to hire Mr. B, but still Mr. A may hire. It's his choice to hire. Okay, that's why it becomes agreement based rather than the legal or law based. So audit is a verification exercise. Due diligence is the detailed examination exercise. You can say that in nutshell. Okay. That was audit and due diligence. Now, coming to the next part is, what is the importance of due diligence? Why we need due diligence?
So can we say that standards are applicable on audit and they are not applicable on due diligence in part of reporting or other things?
Yes,
Because
definitely.
one of the difference can it be?
Yes, absolutely. Because when it comes to the audit, you have a separate set of standards. Okay, engagement and quality control standards are there. And not even for audit, there are for the certification also. But due diligence, these standards are not applicable. For example, materiality. For example, risk assessment. Reason because due diligence can be of a non-financial item, can be of non-financial areas. In that scenario, you cannot apply those standards. So that's also a very good distinction. But again, the purpose here is that understand the objective of both due diligence and audit. They both are different because their objective is different. Okay. Now let's understand the importance of the due diligence. But before that, I just want to pose a question. Imagine you are advising a company that wants to acquire a fast growing startup. Startup has very good revenue, amazing revenue, but thin profits. Thin profits means there are negligible profits because they are burning the cash. Okay. Now they hire you. Okay. Please tell us that what are the red flags or key areas that the buying company should focus upon. Okay. While entering into the deal, because these red flags will impact the price, the amount that the company will pay to acquire the startup. By this particular example, understand the importance of the due diligence. That when a buyer engages you for the due diligence, the deal is stuck on your work. The deal is dependent upon your work. If you give a report that, okay, there are many problems in the company, the deal may go off. It will impact usually on the price that is being negotiated. So that's how important the due diligence is. With respect to basically due diligence part, okay. Now here your role is to identify problems, identify issues in the subject matter on which you are carrying out the due diligence. Okay. So your due diligence will be the critical factor to decide the success or failure of the deal. Understand that. Okay. So that's how important your due diligence is. Now, if I talk about the classification of the due diligence quickly, there are various type of due diligence based on the subject matter. One, you have a commercial due diligence. One, you have a financial due diligence. When I talk about commercial due diligence, that means that you understand, you analyze the company's commercial front. For example, let's say A Limited deals in car manufacturing. Okay. Now B Limited wants to acquire A Limited. Now you want to conduct a commercial due diligence. That means you will understand this car manufacturing business is viable. What is the market share? Whether you have a good brand or not, whether your brands are recognized market wide, whether there is an issue in your what you can say quality, whether there's an issue in the manufacturing. Okay, so a lot of things you analyze from the commercial or operational due diligence point of view, but with respect to operations, sale, or commercial terms, that is a commercial or operation due diligence. That usually happens when a brand is being acquired. For example, if today I go and acquire a brand who manufactures the car, who manufactures the mobile, I need to evaluate all these things. Financial due diligence. Financial due diligence basically talks about financial analysis of the company. If I acquire a startup, I want to make sure that particular startup, that particular company is financially sound. It has disclosed all the things properly in its books of accounts. For example, unrecorded liabilities, very important area when it comes to the financial due diligence. Okay, so in financial due diligence, unrecorded liabilities is a very good area where a lot of focus is given. Tax due diligence, amazing area again. Reason because whenever these deals happen in tax due diligence, we understand what is the tax impact of the merger, acquisition, or the deal. Okay, even in the cross-border transactions, we evaluate what is the international tax portions, the benefit that we will get in the DTAA, or accordingly what will be the scenario after the merger. Can we get the losses of the foreign subsidiary, or however the transaction is there? But tax diligence, you analyze all those international tax, domestic tax areas. Information system due diligence. Information system due diligence. Now, what is this? Information system due diligence. Quickly, 1 minute. Tell me what is information system due diligence. What do you do in this? Write in the chat box. I'll give you 1 minute. Quickly. Come on. No? Okay. Information system due diligence. See, for example, in information system due diligence, what happens is, let's say there is a company A. Good company. Okay. Company A. Now, company A wants to acquire B Limited. Now, this A company, let's say, runs ERP, which is SAP. B Limited runs an ERP, which is customized. Yeah, which is customized. When a deal happens, this is also looked into, because once a merger will happen, there will be a combined operations. Can this combined operations sustain this combination also? Like SAP ERP and customized ERP working together, data is flowing appropriately. This was the biggest challenge when two telecom mergers happen. For example, there is a telecom A, telecom B company. When they merge, this is a very big area which is first looked into, because all telecom operators have their different ERPs. It's not just one thing which is working upon. They have different systems, they have different things which are required to be interlinked, which are required to be combined. They cannot run two different systems. Reason because it will impact their cost. They will not be able to get the synergy out of it. That's why information system due diligence is a very critical area nowadays. And day by day, when companies are becoming more IT dependent, more IT driven, this is a very good area. Legal due diligence, like about the legal matters, any legal issues, legal cases pending. Environmental due diligence for the manufacturing companies. If the company is into the manufacturing, is it impacting environment? How it is working on the ESG front? Okay. When we will go to chapter number 18, we will learn about the ESG in detail. Personal due diligence. Because it is very important. The way it is IT asset, IT due diligence, like SAP and customized ERP, personal, people, employees are also the asset of the company. Their matching, their correlation, how they can work together is also important. So that you check in your personal due diligence. So these are the types of due diligence. Clear? Any doubt? Any doubt?
No, sir.
So
Yes, sir.
are there any appointment requirements and
Are there any appointment?
requirements like some specific, or is it a normal?
Okay, when it comes to the appointment requirement, it is based on the agreement. As I said, appointment in the due diligence is based on the agreement that will be between, either two parties or three parties. For example, whenever a deal happens, let's say Mr. A and XYZ are going to do a deal. Okay. So what will happen is they will first sign a pre-deal agreement. This pre-deal agreement will contain a clause of due diligence. This clause will give power to Mr. A to appoint the due diligence personnel who will conduct the due diligence. So, based on this clause, Mr. A will, enter into a contract with Mr. P that, okay, you carry out the due diligence of XYZ Limited. And based on this clause, XYZ Limited will provide all the data to Mr. P to carry out the due diligence. Okay, which will support him in carrying out the due diligence. So this is how the appointment happens in real life when it comes to the due diligence part.
Thank you, sir.
Yeah. Any other doubts? Any other questions?
See, during the due diligence process, see, actually, when it assigned, is there even a threat to it, sir? Threat will be there, no? The data will not be given, or I will not provide this data like that. The
See, when it comes to
intimidation threat will be there, I think.
see, usually it doesn't happen like this way because see, at the end, everyone wants to, get the deal done. If the company, see, your due diligence will decide the deal, whether the deal is happening or not. And everyone wants that the deal should happen. That's why you are being hired. Tomorrow, if you say, I'm not getting the data, there is a problem, there is an issue, company is not responding, the deal will go off. And no one wants that. That's why, this happens very rare case scenario that there is an intimidation or they are, forcing the due diligence personnel that, okay, don't carry the due diligence or they are, interfering in the due diligence. Rather, they cooperate fully because the better the due diligence results, the better will be the transaction price of the particular transaction.
See, I'm asking with respect to any financial institution given the loan to the company, they wanted to do the due diligence. In those cases, or some creditor wanted to do some due diligence, threat may be there. That's what I'm. See, when we are selling the deal, that time definitely the both party will give the data.
Yeah. So you are talking about investigation basically when a bank gives the loan and hires a person that go and investigates the books of account
Yes,
or
sir. Yes,
stock.
sir.
Or,
Yes,
at
sir.
that, so we will see in the investigation part. We'll see in that. I will take up for that particular portion in the investigation. What are the challenges in the investigation that usually an investigator face? Any other doubts?
So he has to be a chartered accountant.
See, again, when I say due diligence, based on the agreement, any person can be appointed, but CA are well fitted for this reason because you know the business, you know the numbers, you know the details already. You are well equipped with that because that's why CA are preferred choice for a due diligence. But again, like it's based on the agreement, it can be anyone. Any other questions? Okay. Let's proceed further. Okay. So we understood the type of due diligence. Yes. Now we will dwell into one question and accordingly, we will understand further on the due diligence part. Okay. Sorry. The question is, Vicky is a financial analyst working for a large corporation that is considering the acquisition of a mid-sized company, manufacturing company. The initial financial statement provided by the target company appears to be in order, showing profits and a solid asset base. However, his team is concerned about the potential risks that may not be immediately visible in the financial document provided. Guide Vicky on the what specific aspects should be focused during due diligence to ensure that there are no hidden liabilities in the deal. Now, quickly, you give me the answer that what he should look into. Come on, guys. Yeah.
So liabilities, hidden liabilities, if there are one, which are not disclosed. Environmental issues, since it is a manufacturing company. If there are some potential legal cases on that.
Okay. Yes. Very good. What else? Anything else? I'm talking about hidden liability. See, when we will understand one more thing, that how to write an exam, answer in exam also. Okay. So whenever a question comes, first of all, understand what we are required to write and what is the marks and how much we need to write, what way we need to write. So what you are required to write in this particular question, see, okay, you are required guide Vicky. What specific aspects should be focused, okay, during due diligence to ensure that there are no hidden liabilities?
Sir, in this case, we need to check the purchase contract agreement. Is there anything which bound to, and also we can see any advance payment given to any purchase contract. We need to verify in the bank statement as well to ensure any liability is established earlier, which is not accounted in the books of accounts.
Yeah. Yes, very good. Correct. So there are a lot many things you need to look into when it comes to the hidden liabilities.
Yeah, and also we need to the assessment, how the management is assessed. Whether the completely all the purchase bills are, it is a right place to say it, and completeness on all the aspect on the whether the provision in anything is made on the with respect to liability, which is really there is a liability or not. In those aspects, we need to check and ensure it.
Okay, yeah.
Whether there is an overstatement of profits.
Yes.
Since pricing would be involved, so we need to check that.
So also, yes.
Any tax liabilities under direct as well as indirect taxes?
Absolutely correct. Very good. Very good.
Future lease liabilities, any existing in the balance sheet?
Okay. But we are talking about hidden liabilities. If they are in the balance sheet, then what is the problem? So, yeah, we need to, whenever you are writing an answer, we need to understand few things that we need to provide. See, here it is written that specific aspects. So you need to provide point-wise answer. Okay. point-wise answer about the hidden liabilities. In exam, when you have to write point-wise about the hidden liabilities. So what could be the hidden liabilities? Okay. Now, specific aspects. So you have to be specific rather than giving a general answer. You have to give the specific answer. Always focus on the question, what is being asked. And you need to write in 4 marks. So you need to accordingly allocate the time and write the answer in the exam. So answer for this particular question, I will refer to the study material first. Okay. This is one of the area of hidden liabilities, which is given on the page number 17.10 and 11. So these are the specifics about the hidden liability that one should look into when they are performing the due diligence. For example, company has given letter of comforts, which is not there in the balance sheet. How do you record letter of comforts? They are not the guarantees. They are not disclosed in the balance sheet. So you need to look for the letter of comforts. Second, company has sold some subsidiaries business, or they might have done some transaction in the past for which there is an indemnity which was provided. Let's say, for example, I sold a subsidiary last year, and I said, okay, if there is any tax demand, if there is any issue coming up in the future, I will pay you. I'm ready to indemnify you for any liability, for anything coming for this particular business that I'm selling to you. You may never know. You will not have these details in your balance sheet. Okay. So subsidiary sale and indemnification of the liabilities that may arise in the future. Then product liability warranty claims. You have a warranty provision, but you don't have the actual warranty claims or warranty details in the balance sheet. Unless and until it's a very big litigation, they have booked the provision. Tax liabilities. This can be also for the tax matters under dispute, or just they have received the notices from the tax authorities, but no further proceedings, assessment has been done. Long pending sales tax assessment. Nowadays it is GST1. Pending final assessment of custom duties, if there is any. Agreement to buy back shares sold at sold at some prices. Again, now it's not only about the agreement to buy back the shares, it all the agreements which contains the obligation to do something in the future. Okay, agreements that contain the obligation. Future lease liabilities, as correctly pointed out. Environmental problems, as correctly pointed out. Okay. Incorrect gratuity valuations, if there is any. So you need to verify whether the gratuity valuations are undervalued or what is the scenario in the balance sheet. Labor claims, again, disputes, unresolved labor litigations. So these are certain areas or specifics which are required to be looked into when it comes to the undisclosed or hidden liabilities. Clear? Any doubt?
No, sir.
Okay. Now, this was with respect to the undisclosed or hidden liabilities. Can anyone tell me what you do when it comes to the overvalued asset? Now, if someone asks you, okay, let's reframe this question a bit. And now let's talk about overvalued asset. Let's say instead of hidden liabilities, it was asked that provide the specifics about the overvalued asset. What would be your answer in that scenario? Come on.
They may acquired some business in the past, some company in the past, and what is the valuation which is being shown?
Mm-hmm. Okay.
Whether it is at
Sir,
the
we
current
will.
value.
Yes, tell me.
First, we will check the purchase invoice, whether the value, the cost to be checked on the basis of the purchase invoice first. Then we need to ascertain whether that value useful life is correctly taken or not. Suppose if the useful value is taken the lesser period or over period, the useful life is taken for the long period means definitely the asset will be overvalued.
Okay. Okay, very good. Yes. What else?
And we need to check whether the cost model on revaluation or revaluation model is used as per the PPE standard to revaluation of the each and every year on the reporting date.
Okay. Yes, good. Anyone else? Okay, let's see the answer. See, again, when you have to write an exam, be specific, be on the points, specific points, because as it is asked in the question, so you have to make sure that your answer aligns with the question. Okay, what is written, what is being expected to ask, right? And make sure you do not write whenever there is these kind of questions are there. Do not write big paragraphs in your points. Be crisp, precise, and what is required to be written. For example, absolute or slow moving, non-moving in inventories. Okay, might not be identified or not be valued accordingly. If there is an absolute or slow moving or non-moving and inventory which is not provided for, that is an overvalued asset. Underuse or absolute plants and machinery, their spares, which are yet to be written off, which are yet to be provided for. Impaired plant and machineries. Asset carried at much more than the current market value due to capitalization of expenditure on foreign exchange fluctuation. That happens on a very big scale. For example, bought machine. Okay. On let's say 1/4/2021. I bought a machine on 1/4/2021. It's a very big machine. Let's say, for example, 250 CR. I was supposed to pay payment in trenches. Okay, in 5 trenches, basically, for 5 years. So, 50/50 CR each year. Let's say 1/4/22 50 CR, 1/4/23 50 CR, like this way. Because at times, it becomes difficult to pay whole amount together. And in that scenario, sometimes, incorrect capitalization of foreign exchange fluctuation, because let's say 250 CR is a INR, but usually the billings are done in USD or some other currency. In that case, because of the market up and down, you may pay a different amount. That's why it can happen that, because of the foreign exchange fluctuations, because of some expenditures, you have a higher asset value than compared to what it should be. Litigated assets and properties. You don't have a clear title of the land. Still, you are recognized in your books of accounts. Investment carried at cost, but realizable value is much lower because of the market conditions. Investment carrying a very low rate of income or return, but you have recognized as the cost. It has very low rate of income, or it is kind of a investment which is required provision or impairment. Infructuous project expenditure, and this is a classic example. And this one, intangible with asset of no value. These two are very critical to analyze. Reason, because what happens is nowadays, a lot of companies are going digital. They are preparing the IT assets, and they are investing heavily. Let's say, for example, they build up they build a portal. While building the portal, they invested a lot of amount. Okay, so they will recognize that code, software, everything as intangible. Later on, 1 year later, they came to know that the code that was written for one of the module of the IT environment or the asset or the website is no longer usable. And they have to rewrite the code because of the change in the technology. They again invested the amount, again capitalized. But you will never come to know that the amount that was invested for the prior code, which is now not usable, We have to remove that. We have to provide for, but it is never provided. And intangibles keep on growing, keep on growing, keep on growing. So that goes to the overvaluation of the asset. So project expenditures or deferred revenue expenditures which are building up because projects is going on, but in actual it's just a redo of the work or redo of the project because of some XYZ reason. Group balances under reconciliation. So there is a intercompany reconciliation going on and this has a very good balance. So that is also an overvalued asset. These are the specific examples of the overvalued asset. Any doubt? Any doubt, guys?
No, sir.
Okay, great. Now, this is one of the areas of the due diligence. There could be multiple areas of the due diligence. For example, looking to the brief history of the target company. Okay, if a due diligence is for the financial due diligence, it may include a lot of areas. And what are those areas which may be there? So one is the brief history of the target company. 10 is in review of financial statement, review of accounting policies. You do a due diligence about the taxation matter, cash flow, financial projections, management and employees, statutory compliance. This everything is part of your financial due diligence. Okay, this is part of the financial due diligence. So these are the areas that you look into when you carry out a financial due diligence. Okay. So we will take one more question which is given in the study material. Very good one. CAY is employed with a lending private sector bank posted in the Noida branch. One of the existing borrowers has approached the branch with a proposal of sanction fresh term loan of 5 crores with commensurate increase in the working capital credit facilities relating to the expansion of the garment manufacture unit. While performing due diligence, he noticed that the company just formed 2 years ago and he had availed the loan of 10 crores and the cash credit facilities of 5 crores respectively. Its sales have increased from 25 crores in the first year to 45 crores in just the next year. It is generating cash profit and timely servicing the debts. The borrower was catering to the domestic market earlier. However, now it is in the process of procuring export orders and working diligently in this regard. The expansion plans in line with the development in the area of marketing related exports. However, there are large number of units catering the domestic and export market of garments in the Noida, Delhi and surrounding areas. There is also a demand slump in the biggest US market. Besides, the unit is family based, relies on the upon marketing skill of its main promoter. There is a lack of well-paid qualified staff with the borrowers to deal effectively with customer, both domestic as well as foreign. Okay. Identify what he's trying to do as a part of due diligence. He starts jotting down and elaborating above points, and you need to identify what he's trying to do as a part of due diligence. So by reading this, can you tell me what he's doing? What kind of due diligence he's doing? What are the points he's looking into?
So viability of the future expansion of the company, which is trying to take a further limit, increased limit, whether that is viable for the bank to further finance the company or not, and what are the risks associated and the projected sales he will be able to make in the exports.
Okay. So can you name some specific areas which are looked into and the due diligence done in that specific areas?
What he is trying to do, what that
so he's basically seeing that the market is already overburned. I mean, there are a lot of sellers in the market, and they may not be able to generate that much demand. Then the company is reliant on the sole skills of the promoter his own marketing skills. They don't have that much infrastructure catering to market the product which they are trying to export. They may not be having the export orders, necessary orders, to make the supplies. And there is already a demand slump in the US market which has been identified. And it is basically a family based company, which is not a very professional organization.
Absolutely, yes. Absolutely correct. See, now here, if I talk about in this particular scenario, what he is looking into, number one, he is looking into the background of the company. For example, from just 2 years ago, brief history of the company. Remember, we saw one of the area was a brief history of the company. Okay. Number two, he's looking into the financial loans that have been taken by the company. 10 crores of term loan, cash credit facility. Then he's looking into the numbers of sales number, how the company is doing. 25 CR in the first year, then 45 CR. So sales, brief history, loans or borrowings. Okay, there is one more area with respect to the brief history. That is, okay, this is the family driven, family based. Number two, marketing skills of its main promoter. That is again management point, that management and employee. This is your prospectus about the company, like what market demand company captures, what is the particular demand of the garments that they are doing. So catering to domestic and export, but there are large number of competition also. Demand is also slump. So this is commercial point of view, commercial and operational. Accordingly, he's looking into multiple areas. Before he submits his report to the bank, he's looking into multiple areas for the due diligence for that particular company. Clear? Any doubt?
He may also advise the company to increase the security because of the risk associated with the further.
See,
He may advise that since there is a potential risk, so the company may seek more cover. The bank may seek more cover from the company.
At that, I will come to the next part, that is the due diligence report. See, what we have to say, whether we are the person to recommend to the bank what cover they should take, or what is our role after due diligence, what we need to do as a closure of the due diligence or recommendation or whatever. That is something we need to understand with the process and the reporting part of the due diligence. Usually when the due diligence happen, what is the reporting, what is the process of the due diligence? We define the subject matter, we discover the details, like we design the process, we discover the details, we understand the details, and based on that, we deliver the due diligence report. So the approach which is used is define, design, discover, diagnose, deliver. This is how, once you define, then it is how it works. You design the procedure, you discover, that means you perform the due diligence. Once you get the information, you diagnose, that means you analyze the information. Then basically you provide the delivery of the report, and then defend. Now when it comes to the delivery of the report, what we say in the report, that is very important to understand. Do we recommend that what bank should do, or do we only highlight what we have identified? There are two different things. If we say that we recommend some actions to the bank, based on our agreement, it may happen. But usually in the due diligence, our role is to highlight what we have identified, because it's a facts-based exercise. Quickly, we will look into a due diligence report structure. First, we give an executive summary. What we did, what we identified. Introduction, about the company. Okay. Background about the target company. Objective of the due diligence, financial, commercial, overall, whatever it is. Terms of reference and scope of verification, what I will refer and what I will do in my verification, kind of the plan. Brief history of the company, promoter and everything, shareholding pattern, if that is part of your due diligence. Observation on the review, you provide your observation. Okay, these are the issues that we have identified. Assessment of the management structure, these are the issues we have identified in the structure. Issues identified in the financial liabilities. Issues identified in the assessment of valuation of asset. Okay. Comments on properties. Again, all the issues of operating results, issues on the taxability, if part of the scope. Liability. Okay. Assessment of network, investments, SWOT analysis if you have done. Comments on the future projection if you have reviewed that as a part of your due diligence. Suggestions, this charges and everything. Okay, now these two areas, suggestions, they are only provided to the specific with respect to the based on your agreement. If your agreement covers that you have to provide the relevant suggestion to cover that risk, to cover that area, to cover that issue that you identified, then only these suggestions are provided. Otherwise, your reports ends here. Done. We have identified all the issues, matter over. Now it's the responsibility of the bank or the person or whosoever it is to think of like how he should, look into this particular observations or issues. Critically, for example, when there is a share transaction or deal happen, merger deal, okay, we usually don't recommend the share price. After performing the due diligence, we don't go and say, okay, look, the company was negotiating at 150 per share, you should go for 75 per share. No, it's the job of a valuation guy. Our job is to identify issues. Our report will go to the valuation guy. The company and the valuation guy now will decide a deal, what is the best share price per amount per share they can pay. Okay, so due diligence based is basically on the fact driven, providing the observations in the report rather than the recommending the actions. Clear? Any doubt? No? Okay, not an issue. We move to our next part. That is an investigation. What is investigation? Investigation is the critical examination of the accounts with specific purpose. Again, when I talk about investigation, it's the inquiry into the facts. Specific examination for a special purpose. Okay. Can be statutory, can be non-statutory. We will see what is statutory investigation. We will see what is non-statutory investigation. But the objective here is that I have to do an examination. I need to collect the evidence. In audit, you need to provide reasonable assurance. Versus an investigation, you have to do in special in that examination with the clear outcome, specific outcome. No chances of probability, no chances of the something left out. If you are giving the opinion, it should be either yes, no, happen, not happen. When it comes to the investigation. Okay. So it has a very detailed scope, very detailed outcome. Whether it has happened, it has not happened, whether the transaction or whatever the subject matter you are looking into, you have to give the answer in specifics. Not based on the probability. Okay. Now, let's say, for example, I'll give you a critical example, one good example. Let's say the management of a company suspects that, okay, there is the sale head is colliding with the distributors to show fake sales at the year end to meet the target. And he's earning a huge bonus from that. They hire you for an investigation. Okay. Now, do you think your approach will be different from how you audit the sale versus you have to, now investigation? Now you have to perform investigation to, identify this kind of collusion? Do you think there will be a difference? Yes, no? I'll repeat my question. Yeah. Yes.
Sir, in audit, we will be performing the materiality and the risk materiality and giving an opinion on the uh, whether the financial statements express a true and fair view. Whether
Yeah.
here we have to come up with a specific answer on the specific aspect of a issue that the sales head is colluding with the distributor and giving fails targets. So this part has to be specific and covered. While in audit, we may consider the materiality of this aspect, and depending on that, we'll perform the procedures. Here, we will have to give a clear cut opinion whether it is happening or not happening, and our opinion should be specific on that.
Yes, absolutely correct. So when I talk about audit, basically in case of your audit, what happens? Okay, you have a specific year, like audit for a particular year. You will look into that. Okay, in the audit, what I'm doing is I'm checking based on materiality. I am checking based on year, and I am doing sample testing. Okay, but when it comes to the investigation usually goes for a specific period. It can be 2 months. It can be 3 months. I may check the 2 months, 3 months sales. Not necessary for the entire year. In investigation, no materiality. I don't focus on the materiality. Rather, I check all the transactions during the period to get the details. Okay. Audit, you have a risk-based approach. That is, you audit the areas where there is a high risk, or you audit according to the risk. In investigation, it is not like that. Investigation basically goes based on the nature of the investigation, the type of the investigation, irrespective of the risk that I have. I may have a lower risk, but still I will go and do the investigation to the fullest extent possible, because I cannot leave a single evidence left unturned. That's why audit is limited when it comes to the subject matter. Investigation is more detailed. Okay, so investigation basically in-depth examination of particular records. When it comes to the audit assignment, audit aims to a collection of sufficient and appropriate audit evidence. Remember that sufficient and appropriate audit evidence is part of my audit. Okay, investigation, specific information, specific records, specific detail I need. Clear? So here we have a good table given, very important. Okay, refer before exam. Quickly, so you can mark it. Just glance it quickly before the exam. It will help you a lot to understand the investigation topic. Okay, for example, investigation aims at establishing a fact, whereas the audit is display of true and fair view. Scope of investigation governed by statute, maybe non-statutory. Audit is always statutory. Unless and until you are doing SA 800 audit. Remember, anyone has gone through SA 800? Yes, no? Anything from SA 800? Do you remember that? I think no. Okay. Periodicity, not limited, based on the agreement. Audit yearly, quarterly, half yearly, or yearly. Nature, detailed study. Investigation requires detailed study. Audit, technique based, risk based, judgment based. Limitations, there are no limitations in audit or in investigation. You have to go in depth, in detail, 100%. Audit suffers from inherent limitation that you cannot check 100%. Evidence, it's a conclusive. When it comes to the audit, it is prima facie evidence, that is sufficient and appropriate audit evidence. Observance of principle of accounting. Like it's an investigation is an analytical nature, may involve a lot of areas, not only accounting principles, but a lot of areas. Audit based on the generally accepted accounting principles and the financial reporting framework. Appointing agency can be anyone, third party also, in case of investigation. Audit is usually appointed by, auditor is usually appointed by the company or the shareholders. Reporting, the outcome is done to the owners of the business entity. In case of investigation, it can be to anyone. Regulatory authority, third party, company. So, who has asked her to carry out the investigation? Okay, so a good differentiation between investigation and audit that will help you to understand the investigation in much more detail. Clear? Any doubts? Okay.
Clear.
Quickly, yes. Any doubt? Okay, no. Okay, so quickly I'll take you to the steps of investigation. Again, how investigation is carried out, basically. When it comes to the investigation, okay, what is the basics and what is the primary, you would say, process of carrying out the investigation is, first of all, whenever you are being hired for the investigation, you define what are your objectives, what you want to do in the investigation, because that will decide the scope and the nature of the investigation that you are going to carry. Okay, what is the objective of the investigation? What is the scope of your investigation? Objective and scope is the first thing that you decide. Then, next thing is you decide the plan. Once you have decided the objective and the scope, you decide the plan and program of the investigation. Okay, this is how I want to carry out the investigation. Okay, this is something I want to do. Then you perform the examination. Then you do the analysis and then reporting. So if I talk about the whole process is first objective and scope, then plan, perform, analyze, analysis, and then prepare. This is how the investigation is being performed. Okay. You can say that quickly if you want to remember OPPAP. Simple. OPPAP. So that is how investigation is performed. Objective, plan, perform, analyze, prepare. Again, I will not go into the details because pretty self-explanatory that you decide the objective and the scope of the investigation, which involves the period, the transaction, the subject matter, and everything. Basically, that is the part of your scope. An objective is something, what outcome you are looking for, what basically why you are going into the particular investigation. Formulate the investigation plan and program, that how you will carry out the investigation. Perform, that is examination of the records, evidence, everything that you collect. You then do the analysis, connecting the dots, and then you prepare the conclusions. Okay. Now, is it a one-step approach? Is it a linear approach? Like this way, one by one step? Answer is no, it's not a linear one. I'll tell you why. It is a circular approach. So once you decide the objective and scope, okay, then you enter into a circle of plan, perform, and analysis. That is plan, perform, and analysis. This is a circular approach. Okay. Once you have sufficient analysis, then you go out for the preparation. Why? Reason, because in investigation, we first plan, we perform, we do the analysis, we may get the details, we may not get the details. And accordingly, we may change the plan, we perform the analysis, or reperform the audit or investigation and then do the analysis again. So plan, perform, analysis goes on till the time you have a sufficient analysis to prepare the report. Okay, so it's not a linear approach, rather than a circular ongoing mechanism till the time you have a good analysis ready to prepare the report. Okay, you can the steps are given over here in detail. I would recommend you to read once, but yes, that's the something investigation plan and procedures. Number 2, there is no definite plan or definite program that you can apply to each and every investigation. Every investigation requires a separate plan and program. There is no one fit approach for the investigation. Okay. There is no one fit approach for the analysis, for the scope and everything. So if you ask me, can I apply this particular investigation plan to some other investigation? Answer is no. Straightforward no. Okay. Then we will look into some important points that are required to be considered when you are drafting the report of the investigation. And this is very, very important, trust me. So when you are drafting the report for the investigation, you need to highlight the nature of the investigation, why this investigation was done. Every word or expression should properly be used. For example, somewhere you are using employee, somewhere you are using management, somewhere you are using workers or something else, somewhere you using let's say for example some other contractors. For single type of person or any subject matter, if you use multiple terminologies, it will confuse the person, it will confuse the reader. So don't do that. Be specific, properly choose your words. Okay. Then relevant facts, not the assumptions. Whenever you write investigation report, don't write, we assume this might have happened. No. What are the facts? You have to write that. Okay. Basis and assumptions. If you have taken any, then after the relevant facts, it should come and it should be in a separate headings, explicitly stated that these are the assumptions we have taken. But again, they should be reasonable. They should be appropriate with respect to your investigation. They should not be conflicting with the objectives. And if possible, take as many, as less assumptions as possible. Do not go for many assumptions. Okay. Spell out the nature and objective of the engagement in your report. Identify any limitations if there are any. Okay. With headings and proper paragraph, the report should be with headings and proper paragraph. Opinion of the investigator should appear in the final paragraph of the report, whether that has happened or not. Okay. This is how, or these are some important points that you should look into while preparing your investigation report. Clear?
Yes.
Okay. Let's take one question on the investigation. Very good questions. We will understand more onto the investigation by that question. Core Limited submitted a credit proposal to XYZ Bank Limited for sanctioning of a term loan of 150 crores requiring for procuring and installing a latest plant and machinery for their upcoming projects. Based on the application, XYZ Bank has approached CAP to investigate the profitability of the business for judging the accuracy of the schedules of repayment furnished by the Core Limited, as well as the value of security in the form of assets of the business already possessed and those that will be created out of the loan. Provide or specify the steps that should be undertaken by CAP. Okay. Tell me what are the steps that CAP should undertake here to carry out this investigation.
We will check whether there was any need for whether he was requiring to that particular machinery or not.
Okay.
Code limited, and the valuation which has been submitted is correct or not. The agreement with the vendor and all, we'll vouch that whether it
Yes.
is inflated or it is correctly valued. Based on the requirement and then we will investigate the profitability of the business with the
Yes.
ratios and all, whether the future projections and the current profitability is sufficient enough to, and the usage of that additional machinery, new machinery will, increase the turnover and aspects, and how he plans to, market those products or use uh, the sales from that product, how it is going to be, factored into. And then we will verify the securities like the immovable property which has been mortgaged with the bank, whether the title deeds are proper in order, whether all the chain of documents are there, whether the original title deeds exist, because these days there are a lot of frauds happening.
Yeah.
Properly registered with the registering authority. There is no other charge of any other bank on those property, or any subsequent charge has been created on those properties.
Yes.
And then
Absolutely.
we'll verify the stock which has been, there is a charge on the stock also many a times, and the guarantee documents, guarantees undertaken, whether there's collateral and guarantees.
Absolutely correct. Yes. Yes. Very good. See, now when yes,
Sir,
anything else?
see, when the steps involved in that investigation, we need to draw the objective, scope, plan, and perform, analyze, and prepare the report. That is the steps involved in this process. Here, specifically, they given the schedule of the payment furnished by the limited and the security of the forms of asset, and also the asset is free to create the charges. All these things is involved. When we look at the free to charges, we can go and check the MCA site whether that the charges is created for some other entity, whether it is free from this to create the charges on this. Likewise, we need to plan and we need to analyze the profitability by looking into the projected balance sheet, how the profitability is coming on this, and whether they can able to make the repayment capacity is there or not. We can look at the profit ratios involved in it.
Absolutely. Very good.
We need to analyze in depth of each and every area. We need to analyze. Then we have to give the report based on that. We need to give the report based on the real fact. What is the fact? What is the basis of assumption we have done? We need to clearly spell out the nature of objectives, everything we need to involve, and we have to provide that.
Yes, very good. Yes, good. Okay. See, now I'll tell you one more thing. Whenever question comes in exam, your answers are correct. Not an issue. Very good answers. But we have to write it from the exam's point of view also. We have to be specific. We have to be clear, like, what is asked and what we are writing. So at times, the problem lies with our answers are correct. Our answers are appropriately correct, but we sometimes go way beyond than what is asked. We need to stick to the particular topic that is there, and we need to stick to the particular, point that is being asked. So if you see over here, what is asked, that here, steps that are required to be taken by CAP. Okay, to investigate the profitability, accuracy of the schedules of repayment furnished by them, as well as the value of security. So there are three things with respect to which the steps are required to be undertaken. Now, some may write the answer with respect to the steps of performing investigation. like what steps he should take and how he investigation should be done. Like this one earlier one, like this is the plan, perform, that's those steps. But that is basically incorrect. No, you have been asked for the specifics on the profitability, schedule of repayment, and security, not on the how investigation is to be done. So do not write how investigation to be done. It is not asked that. It is asked about the profitability, schedule of payment, and the security. That is you have to write in the exam. Always read the questions carefully and then try to answer. All of your answers were correct when you gave the answer with respect to the profitability, repayment schedule, security. But break down your answer into the sections. Let's say, for example, there are three things are. For profitability, this is required to be done. For a repayment, this is required to be done. For security, this is required to be done. Specifics. Because at the end, you have to answer for the 5 marks with the given limited time. Okay. Let's see the answer. So, answer again, we will talk about specifics. Okay. See, now to investigate the profitability of the business, accuracy of the repayment schedule, okay, security of the asset, we need to do the under mentioned steps. Introduction part of your answer. First comes the profitability. How you will check the profitability? You will prepare the income statement, profit and loss account, okay, statement of profit and loss, previous 5 years, you will look into that, okay. You will see the income and expenses during the last 5 years, net profit, gross profits, taxes paid, okay. So prepare a condensed income statement, previous 5 years, income expense analysis, the income expense, what are the taxes paid, maintainable profit, net profit, gross profit, operating margins, okay. And on the basis of that, you understand the profitability of the business. Okay. So based on that, you analyze what is the profitability of the business. Now coming to the accuracy of the scheduled repayment. Scheduled repayment. How you can check the accuracy of the scheduled repayment? Plus how you can make sure that there is a security in the form of assets, like value of the security. Basically, if you want to talk about value of the security and if you want to talk about more onto the repayment schedule, I'll come to that. But along with the profitability, if you have to link the profitability with the repayment schedule, you have to analyze ratios. That whether my ratios support my business or not. For example, sales to average inventory, sales to fixed asset, sales equity to fixed asset, current asset to current liabilities. These ratios will give you a good picture about your position, financial profitability position plus security position of your asset. For example, current ratio will tell me how much current assets I have in terms of the security. Quick ratio, equity to long-term loans, sales to book debt. These ratios will help me to understand my position with respect to the security of the company. Okay. Then I may go up and I may check more onto the profitability, but yes, this much is well enough with respect to the security part. Plus, I will take you to some additional areas that you can look into when it comes to the repayment schedule. Okay. For example, when you talk about the repayment schedule, you can go and check the details with respect to like what are the debts due, what are your debts due in the next 6 months, okay, in respect of the loans that you already have outstanding. So that will help bank to understand, okay, these are the already loans which are there. These are the dues which are there in the next 6 months or next 1 year. Okay. So based on that, bank will be able to understand your repayment schedule. If there are any debts due with but not recovered. Okay. Accordingly, based on these debts due, not paid, due in the next 6 months, due immediately, okay, or due in the later period of the time, later year or in coming period, will help you to determine your repayment schedule, accuracy of the repayment schedule. So this is how you can, either investigate into the profitability, accuracy of the repayment schedule, and value of the security that business already possess. Clear? Any doubt?
Yes, sir. Yes, sir.
Yes, sir.
Clear.
So always be specific and be relevant to the answer and think what is required to be asked. Most of the times you may write additional things, but that will take up your time only. So you have to be specific in that. Okay. We'll take one more question on the investigation so that we can have a good understanding of the topic. Quality Limited is engaged in the business of manufacturing and distribution of various ready-to-cook products like vegetable, noodles, etc. The government made certain changes in the rules and regulations relating to this sector. Consequently, management decided to go for expansion. Management was looking for some financial investor who can fund some part of the proposed expansion. Mr. Raman is interested in the venture and appoints you to act as an advisor to the proposed investment in the business of your business of Quality Limited. You have to investigate the audited financial statement and ensure that the valuation of the shares of the company, the basis of the on the basis of the audited financial statement, is appropriate. What process will be used for checking, and can Reliance be placed on the already audited accounts? What do you think? What should be the process to check the this particular valuation of the share or investigation, and whether can you place the Reliance on already audited statement of accounts? Come on. How will you carry out the investigation? What are the steps?
We'll calculate the PE ratio and EPS to find out the value of the shares,
Okay.
whether it is correctly reflected or not.
Okay. Very good. What else? Think from a point of view that this is a question in exam. What you will write? This question is coming into the exam. What you will write in this?
We'll compare the balance sheet and the audited financial statements. We'll read both, whether the disclosures or how the audited balance sheet has covered those various aspects of the balance sheet financial statements in the audit report, and pointed out those which reflect that the audit is proper and correct.
Okay.
Sir, see, we need to provide the valuation of shares of the company on the best of last audited statement is appropriate. We need to check whether it's a continued operation, discontinued operation separately is there. We need to, whether they have calculated that valuation of share, combined the both and given the solution, we need to ascertain it. And valuation, any revaluation reserve or something is that OCI, whether they consider that other comprehensive income, if anything that relating to revaluation reserve included in it, the valuation of share, that should be excluded actually. And we need to ascertain all the profit and loss with respect to the company. Also, we need to check any fictitious purchase or fictitious sales is recorded into the business. For that, we need to put the valuation. We need to check the bank statement also for that. We need to ascertain. We need to basically evaluate the assessment what made by the evaluation by the existing financial statement. Also, the materiality test. All these things we need to find any like this. We need to compute and ascertain, sir.
Okay. Anyone else?
Here it is saying that management decided to go for expansion. So here any economic as well as political considerations
Okay.
will be there. Or we have to do the trend analysis, like whether in the past sales have been increasing consistently or they have been fluctuating. Proper study of the phenomenon should be made.
Okay. Okay. Good. Okay. Anyone else?
So investigation is something more than the audit. For only audit is only for 1 year. For investigation, we have to see the last 4 to 5 years what the means company has done and on, and then only investor will decide to invest in that company.
Okay. Okay. Good. Okay. Now, again, when it comes to the answer to this particular question, again, focus on what is asked. What is asked over here? That you have to, you have to provide on the process that will be used for checking. Number one, checking what? Valuation of shares. Number two, Reliance can Reliance be placed on the already audited accounts statement of accounts? There are two important things. Again, I will, if I am attempting this answer, I will divide my answer in two portions. The steps or the process that will be used to check the valuation of shares. Number two, about the reliance on the already audited of account statement. See, when it comes to the steps that will be, or the process that will be used for checking the valuation of shares, what I will do, I will determine what is the basis of the valuation. Net asset, yield basis. What is the basis of valuation? I will write about the methods of the valuation, whether it's a net asset or yield basis, and accordingly, I will check the valuation of the shares. That's it. That's I'm going to write for the process. So I will provide a background on the I will provide the background on about the valuation of the shares, like how valuation is done, and let's say, for example, if it is the net asset or the yield value, accordingly, I will look into the particular area. Okay. So if you see on your in your study material, investigation for the valuation of shares of private companies, that is there on 17.35, you have to provide like which method is being used, net worth basis, yield basis, and some information like if it is a net worth basis, you will look into the value of different assets, revaluation, okay, to compare the book values. If it is a yield basis, okay, you will look into the present value of the rights to receive dividend in the future, yield of the share. Okay, dividends can be paid out of the profits. Accordingly, what is the profit, what is the yield, and accordingly, what yield you will get in the future. That is something I will I will write for the first of the part. Second part, can I place a reliance on already audited statement of accounts? I will write about that. Can I place a reliance? Yes or no? Quickly.
Because of the period, sir. It is for a limited period. Financial statements.
So you are saying no, I cannot.
No, depending on the, since we may be covering more years, so I mean to that extent we may place reliance, but not, it may not be for the full period because
Okay.
it may cover more. We
Okay.
need to cover more.
So in this area, the work performed by others, we need to check the whether work performed with others is based on that accounting standards and auditing standards. We need to re-verify some of the areas.
Okay. So, understood. Look, like what you will write? Whether you can place the Reliance, can we place the Reliance? Okay, I'll take you through. See, we are talking about investigation. Again, investigation is launched because there is something. There is something we need to check. Okay. Now, here, when it comes to the value of business or a share, okay, we can put reliance on the audited materials made available to us, unless and until we have something, contrary to report, or we have identified something contrary. However, if there is an investigation on the basically of your financial statement, audited financial statement, your subject matter is audited financial statement, then I cannot place a reliance on that because that's a subject matter. So there are multiple things that we need to ensure before we place a reliance on the financial statement. Okay. So quickly, if you can come on to the page number 17.22, you have a whether investigation can put reliance on the already audited finance statements of accounts. So if investigator has been requested to establish the value of business or the share or the amount of goodwill payable by the incoming partner, ordinarily investigator would put the reliance on the audited materials made available to him, unless in his post of verification, okay, he identifies something different, or unless the terms of the appointment clearly requires him to test everything afresh. Means your agreements or your appointment letter says no, check everything from start in detail in fresh, don't put a reliance, you will not place a reliance. Secondly, if the statement of accounts which are produced before the investigator were not audited by the qualified accountant, then it's a natural duty to not place a reliance and properly check and verify whether it has been, whether you have to understand, it is not audited. So you need to see who has audited the financial statement, qualified accountant, qualified auditor, or not. Sometimes in some other jurisdiction, for example, a company which is being acquired in, let's say, it's in situation in some other country. Over there, again, the question comes is whether they are audited by management itself, by independent qualified auditor, who is the person who is audited. Okay. For example, when the accounts produced to the investigator have been specifically prepared by the professional accountant. Okay. In that case, yes, he can accept them as a correct. Okay. He can accept that, okay, this is fine, this is proper because it's done by the professional accountant. If there is, biasness involved, there is something involved that is come to the investigator's attention, then he should not rely upon. So this is how I will answer on this question. Simple. Net asset yield basis, there are specific points, and then about the reliance. This is how I have to divide my answer and write my answer. Clear?
Yes, sir.
Very, very important because you have to understand what is asked and how to write the answer. You can write 10 different things. You can write the, 10 different items, but whether it is required or whether it is asked, very important. Okay. What do we do is let's take a quick 5-minute break. After the 5 minutes, we'll gather back and continue the session. Okay. Ashok ji. Thank you very much. Welcome back. Let's continue the session by solving some more questions now from study material, because study material has also very good questions in it. Okay. Question number 7 from the study material. Very good one. A nationalized bank received an application from an export company seeking sanction of the term loan to expand the existing seafood food processing plant. In this connection, the general manager, who is in charge of advances, approaches you to conduct a thorough investigation of this limited company and submit a confidential report based on which he will decide whether to sanction this loan or not. List out the points you will cover in your investigation before submitting your report to the general manager. Now tell me the points that you will cover in your investigation before submitting the report to the general manager. Come on, guys, quickly. Which are the points that you will cover? Anyone? No? Okay, not an issue. So, see, whenever there is a question, always understand what is asked. Okay, so in this particular question, what is asked? That the general manager who is in charge of advance approaches you to conduct a thorough investigation with respect to whether to sanction the loan or not. So this investigation is with respect to sanction of loans. Okay. Now you need to list out the points you will cover in your investigation with respect to providing the loan before you submit the report to the general manager. Now some students might write about the reporting, preparing the investigation report. Answer is no. If you are writing that what to be included in report, like report writing, what are the sections and everything, then your answer is wrong. You are not required to write about the report. You are right to report. You are right to required to write about the points that you will cover in your investigation about this sanctioning of the loan. Okay.
Sir, I will investigate that credit appraisal. On what basis my credit appraisal will be done, and the proper documentation and security creation for that, and also the loans policy and procedure. What is the loans and policy procedure are applicable to that? I will investigate on it. Whether it is.
Okay. Yes.
And sir, it is, since it is company seeking loan for expanding the existing seafood processing plant. So we'll look into the requirement of the company. I mean, why is it requiring this loan, and the area in which it intends to, and the future projections that the company might. We'll check those aspects.
Yep. Absolutely correct.
Then we'll verify the that is it, sir.
Okay.
And so how company will repay the loan and its company's goodwill or reputation in the market, everything they will see.
Yes, very good. So the answer to this is given in your 11.3 on your study material, that is 17.37 page number. Okay. Basically, there are certain points given. Okay. These are the information that you should collect and you should, look into before you report to the manager. Now, what are these points? Number 1, the purpose of the loan that is required and the manner in which borrower proposes to invest the loan. Like why the loan is taken, how he will invest. Number 2, schedule of repayment of loan. Number 3, like here, what are the annual profits, okay, or assets mortgaged to as a collateral or the security for the loan. Financial standing and reputation of the business. whether the company is authorized by the memorandum or articles to borrow the loan, history of growth, development of the company, and last 5 years financial projection, or last 5 years financial performance, not projection. Economic position of the company and the industry in which it is operating. So economical, political, social impact in the industry. Any loan application to other bank or financial institution which was made and rejected. So these are certain points that the investigation should look into with respect to sanctioning of the loan. Okay, and he should look into before submitting the report to the manager, bank manager. Clear? Any doubt?
Yes,
Yes, sir.
sir, clear, sir.
Okay. Very good. Let's solve some more questions. Very good questions are there with respect to investigation. The general objective of an audit to find whether the financial statement show true and fair view. On the other hand, investigation implies systematic, critical, special examination of the records of the business for specific purpose. In the view of above, you are required to brief out the difference between audit and investigation. So how will you write this?
We'll write the objective, how they are different. Objective of the investigation and is establishing a fact, and the auditing is of a true and fair view. Then the scope is governed by the basically agreement. It may be statutory, it may be non-statutory in case of investigation, whereas in case of audit it is always statutory. Then period, it may be more than 1 year, more, or it may be a shorter period. And audit is always yearly. Then the nature, investigation is into very focused
1
area.
year.
Okay. Yep. Very good. Yes. So these are the points we have already covered. Remember the table we discussed about audit versus investigation in detail. I asked you to mark important also. That particular table is the one which we have to write it down and we have to answer over here. That is on your page number 17.17. You will provide about the objectives, you will provide about the scope, periodicity, nature, inherent limitations, evidence, observance of accounting principles, appointing agency, reporting. If you write about these points, well enough, well covered, answer is good to go. Clear? Any doubt?
Clear, sir.
Okay. I will take up another question, one more question. And again, it's a very good question on the due diligence side. Okay. A good case study based question is there on the due diligence. So, a quick revision of the due diligence again, because it's a case study based, it has a good MCQs on it. Okay. So, the case scenario is like this. Karma Limited got incorporated in 1980s as well as private limited company and started its business into two segments, printing and construction. The two business activities were completely different, but those were managed very well and the company grew significantly over the period of time. In year 2001, the company got converted into a public company, and in year 2008, the company also got listed on the Bombay Stock Exchange. The turnover of the company was increasing. However, the margins were not increasing as expectations of the management, and the management analyzed this aspect and realized that the margins were not so high in case of printing segment. The company decided to focus more on the construction business and included infrastructure in its line of business. This was also because of the fact that the government policies were favorable towards the infrastructure sector. Eventually, the company decided to sell its printing segment in 2020. The new investor, that is a buyer for the printing segment, carried out a due diligence for the printing business involving various aspects and the company sold this segment in January 2021. Since the business of the company included infrastructure and it involved transactions with the government official also, the management suspected certain suspicious transactions for which it decided to carry out a forensic accounting for the financial year 21-22. During the audit, certain transactions were identified highly risky, on which the management discussed and set up certain new processes and significant stringent controls so that the business can function in an efficient manner. For the financial year ended 31st March 2024, due diligence was done for the company, which impacted the company significantly in terms of reputation and business. Company lost some significant contracts during the process of investigation itself. At the time of due diligence review, the reviewer assessed the business feasibility also so as to assess whether the current business would be more beneficial in future or not. The management of the company did not understand this perspective. The management argued that the reviewer has no power to assess business feasibility as the company was running a profitable business from many years. The company had various litigations going on those related matters of taxation. The company has taken consultation in respect of those litigations from professionals and renowned legal or tax consultants. The reviewer for the due diligence reviews these consultation documents and also asks for the documents related to these matters. Further, he also suggested that the decisions taken by the company in some matters was not correct. At the time of investigation, the reviewer asked about the background of the promoters of the company. The management explained that there was no need to investigate this. Further, the management explained that the company has already gone through the process of due diligence and forensic accounting in the previous year, and there was no doubt raised on the promoter of the company. So the background of the promoters cannot be shared with the reviewer. Now, some questions with respect to this case scenario. 1. The management argued that the reviewer has no power to assess the business feasibility, as the company has been running a profitable business for many years. Okay, which of the following statements should be correct? The contention of management was correct. Reviewer was correct, as due diligence covers assessment of business feasibility as well. Reviewer was correct, as the due diligence covers assessment of business feasibility, as well as however the company was doing business for decades. It should not have been carried out by the reviewer. Management was correct. However, it should have been discussed the same with the investor as a part of the sale contract. So, what is the answer as per the case study? Should I go to the case study? Do you need a minute to read it?
Yes, sir. That appointment part.
Okay. So, here it is. It's a big case study. So, I'll scroll once you are done with this part.
Middle. Yes, sir. Middle part.
This one. Yeah, okay. Take a minute, read the case study, and then we'll answer. We'll go to the question again. Done? Should I scroll down?
Yes, sir.
No. Okay. So that is the question number 1. The management argued that the reviewer has no power to assess the business feasibility, as the company has been running on a profitable business for many years. Which of the following statement is correct? Quickly. A, B, C, D. Which one is correct?
It will be either A or B.
Okay, either A or B.
B is
sir.
answer from my side.
Anyone else with a different answer?
I think option C is the correct answer.
Option C. Okay. Very good. Okay. Anyone else with a different answer? No? Okay. So some of you said C, some of you said B or C. None with the A or D. Okay, fine. Great. So let's understand the answer first. Let's understand the question also. See, this question is directly related to the area of the due diligence. Okay, what are the due diligence areas and what areas can be covered in the due diligence? We'll go to the study material, okay, and we'll go back to the due diligence areas. Okay. When it comes to the financial due diligence, what we can see, what we can look into, and what are the areas we need to look into. So I'll quickly run through the areas again. Okay. So first area was brief history and target of the company. Okay. Background of the promoters, review of financial statement, financial projection, cash flow, management, employees. And if you go down, I'll show you something. When it comes to the review of financial statement, we review the financial statement. We also check with respect to the operating results of the company. Okay, we check with the what is the results that the company is expecting and what they have achieved it. Okay, plus financial projections. Financial projection of the company, basically we look into that. Okay, what the company is planning, whether the company is profitable in the future or not, whether the company will be able to achieve the target, whether the targets are aggressive or not. So the basically this includes that whether the company will be able to do business in the future feasibly or not. Okay, whether the company has a relevant plans or not. So all these things you already cover in your due diligence. That is a part of your due diligence, one of the area of the due diligence. Hence, if I go back to the question, okay, the first one, the contention of the management was correct, that they have no power. Answer is wrong. Area of the due diligence can be covered. So option number A, not correct. D, management was correct. So again, management is not correct. So I will remove the D because management is not correct. Now B and C, both are, the reviewer was correct. But what is the difference? The difference is in C, they say that however, the company was doing this business for decades and it should have not been carried out by the reviewer. Then who will carry out the due diligence? If it is, if the reviewer will not carry the due diligence, then who will carry? It's absurd. Okay, the due diligence should be carried out by the reviewer. Otherwise, why is carrying out the due diligence? So C is also incorrect. The correct option is B. Clear? Okay, great.
Clear, sir.
Now, let's go to the next question. Question number 9. The due diligence reviewer was given audited financial statement of the company for his financial review for the year end 31st March 2024. I will just zoom it a bit so that you guys can read easily. Okay. However, the reviewer asked for financial statement for 31st March 2023, which was already audited by the statutory auditors of the company, and the management of the company declined this request. Option number A, management is correct. Option number B, reviewer can ask for documents even for the period for which audit is complete. Option number C, reviewer can ask for the financial statement for the period for which audit is complete, but he cannot be given any statement on that. He can collect the same from his documentation purpose only as per the requirement of the auditing standard. Option number D, reviewer has no right to review the financial statement of the period other than the period under review.
Option B is the correct answer.
Okay. Anyone else with a different answer? Anyone? Any other answers anyone has? No?
Option C.
Option C. Okay. Anyone else?
Option C.
Option B. Okay. Okay. So 1 to C, like one is for C and 2 for B's. Good. Okay. Let's see the answer. See, when it comes to due diligence can be for a bigger period. Okay. Even for the due diligence, when I want to go and understand, let's say I'm doing the due diligence for one particular period. Again, the question comes is, can I go to the previous year? Answer is absolutely yes. Because if I want to understand the results of the current period, if I want to understand the business which is as on today, I have to look back into the past. That's why, the brief history of the company is coming into the picture.
Comparative study.
Yes, comparative study. I can only understand the business now if I see the past and the future both. By looking at the present only, I cannot understand the business. That is for sure. As a result, over here, saying that management is correct is not. That's a wrong option. Management is not correct. Option number D, reviewer has a right to review the financial, no right to review the financial statement. That is also incorrect. Reviewer has a right to review. Okay. Now B and C. B talks about reviewer can ask for any documents. Okay. Full power. C talks about that reviewer can ask for financial statement for the period for which audit is completed, but he cannot give any statement on them. Why? Then what is the purpose of due diligence? If I cannot issue a statement on them, okay, if I have something identified, then what is the purpose of due diligence? I can only collect the same, like it is written, he can only collect the same for his documentation purpose only, as per the requirement of the auditing standard. First of all, it's a due diligence. Auditing standards have no role to play. Number two, why would I collect something only for the documentation purpose? I'm not a collector. I'm a reviewer who will review the financial statement to provide a comment. So option number C is incorrect. The correct option is option B. I can look back into the documents for the prior periods. I can comment on them also in my report. Clear?
Yes, sir. Clear.
Yes, sir.
Let's see question number 10. The reviewer for the due diligence reviewed the consultation documents pertaining to various litigations going on, including those related to the matter of taxation, and also asked for the documents related to these matters. Further, he also suggested that the decision taken by the company in some matters was not correct. The reviewer, now, the options are the reviewer needs to have independent assessment of legal or tax cases and outcome needs to be discussed with the management. The company should not have provided the documents as those are confidential. The reviewer can study the tax consultation document but cannot give his opinion as the company already took the opinion from the professional consultant. Tax and legal matters are not part of review of due diligence exercise. Pretty straightforward based on whatever we have discussed now. Give me the quickly an answer to this.
Answer A, sir. A.
Yes, sir.
Yep. Anyone else with a different answer? Anyone with a different answer? No? Okay. Let's check. Let's start with option number D. Legal and tax matter are not part of review of due diligence exercise. We have a separate tax due diligence. So the question that legal and tax matters are not part is incorrect altogether. We'll remove this. Option number B. The company should have not provided the documents. Those are confidential. Then how we will carry out the due diligence? If we don't have the documents, we will not be able to carry out the due diligence. Again, option number B is incorrect. Option number C. The reviewer can study the tax consultation document but cannot give his opinion. Why? I'm carrying out the due diligence. I have to provide the details on that. Otherwise, what is the purpose of due diligence if I'm not providing my, observations in the report? Okay. And if I cannot give, then that's not a due diligence. Again, option number C incorrect. So option number A is correct that reviewer needs to have an independent assessment of the legal and tax cases and outcome needs to be discussed. Otherwise, if I don't do a separate, I can apply the same concept to the audit also. Audit is already done. Then I am doing the due diligence again. fresh check. I could say there is nothing in audit report, matter over. But it is not the case. I have to go in detail. Fresh again. So option A is the correct one. Okay. Question number 11. The management may refuse to share the details of promoters. Comment on this. Options are, since the company has already went through the due diligence and forensic accounting in the previous year, the management may refuse to provide promoters detail to the reviewer. As the background of the promoters has no bearing on the financial statement of the company, the reviewer should not ask for the details of promoter and the management may refuse to provide the same. Since the company went through the process of forensic accounting in past and set up new process and internal controls, the reviewer should not investigate background of the promoters. The contention of management is not correct. Quickly, give me an answer.
Sir, option D. The content of the management is not correct.
D.
Okay. Anyone else with a different answer?
D, sir.
B, as a background has no bearing.
Oh, sir, D.
D, okay, D. Anyone with other than D? Anyone? Like A, B, C? No? Okay, very good. Obviously, yes, you guys are correct. D is the correct answer. Doesn't make any difference whether due diligence or forensic was done in past. See, every due diligence is required to be done afresh. Okay. You may place certain reliance, but that doesn't stop you from reviewing. Okay. That is again reviewer's choice to say that, okay, I will not do this area because I have already sufficient information from this particular report. But that does not stop reviewer from looking into or asking for the details. So A is incorrect accordingly. Okay. B, like background of promoters has no bearing on the financials. No, we have to check brief history of the promoters in due diligence. So this is also incorrect. Again, C also incorrect on the same ground. That doesn't make any difference that what happened in the past in forensic accounting or due diligence. If the reviewer in the current assignment requires it, he requires it. He can review it. Okay, so D is the correct answer. Pretty much clear?
Yes, sir. Clear, sir.
Yes, sir.
So I know most of you, when you read this case study, you might be thinking, oh, this is so much of information, so difficult. How we will answer the questions? But trust me, when you read the case study, the objective here is, understand the case. Do not mug up the details. Understand the case which is given in front of you. Go to the question, understand the question. Most of the time, if you are thorough with the case, okay, like if you have the understanding of the case, if you have understanding of the provision, you can directly give the answer of the MCQs which are there. It may require a revert back on some part, but majority will be, like easy if you have the thorough understanding of the case in first reading. Clear?
Yes, sir.
Yes, sir.
Now, with respect to the investigation, again, there is one small point that I want to take up quickly on the investigation before we proceed to the next topic, is the type of investigations. Okay, there are multiple types of investigations, statutory, non-statutory. We will quickly discuss on those and then we will proceed forward. Okay. So, page number 17.32 of your study material. Basically, there are two types of investigation. One is a statutory investigation. One is your non-statutory investigation. Okay. So what is a statutory investigation? Statutory investigation is an investigation done under the Companies Act. So if an investigation is being carried out under the Companies Act, it will become as a statutory investigation. For example, Section 210. Really sorry for that. Yeah. Section 210. Okay. That is investigation which is done by the inspector through an order of central government. Now, where central government
visibility is not clear, sir.
Visibility of what? Sorry.
Visibility content is not clear.
Blue one, sir. Blue one.
Blue one. I'll come to that. Don't worry. I'll rewrite for you guys. Don't worry on that. Okay. As of now, just focus on the green one. This one. This particular part, that is by investigation by inspector through an order of the central government. So when it comes to the section 210, section 210 talks about that if the central government is of the opinion that there is a need of investigation, if central government has received a report from registrar, if there is a special resolution passed by the company, or if in the public interest, if anything is there, then central government can order a person, or he can appoint an investigator, inspector, to carry out the investigation. Now, these investigations are known as investigation into the affairs of the company. So if I talk about these three investigations, these are the investigation into the affairs of the company, which is basically nothing but section 210, section 212, and section 213. Okay, of the Companies Act. Now, section 212 by SFIO, investigation by SFIO. Now, again, SFIO can investigate into the matters. Okay, if he receives a report from registrar, if the special resolution is passed in public interest, or any government or central government or state government department asks SFIO or submits his report to the SFIO to carry out the investigation, then SFIO under section 212 can appoint an inspector to investigate into the affairs of the company. Third portion, that is other cases, section 213. Now, tribunal may pass an order for the investigation if there is an application by 100 members or 1/10 of the members holding share capital, or 1/5 of total members. So three conditions: 100, 1/10, 1/5. Okay. If an resolution is passed, then yes, tribunal may issue an order for the investigation. If there is a issue with respect to any member, promoter, tribunal may pass an order. If an application is done by business, founder, promoter, member of the company, yes, tribunal can pass an order for the investigation under section 213. And in that case, inspector will be appointed and investigation will be done. Okay. Apart from that, there is a section 219. I'll just provide that information. Section 219, which talks about powers of inspector under an investigation. So if an inspector is appointed under 212, 210, 12, and 13, what are the powers? So basically, if I talk about the powers, it includes that he can look into the accounts of holding subsidiary. Okay. Not only the company, look into the accounts of subsidiary company, holding company, okay, or subsidiary of such holding company. So not only limited to the holding or subsidiary, but it can look into these affairs. Plus, he can look into for records of MD, manager, past, present, both, board of directors, okay, director, independent director, okay. He can look into the details of the manager, board of directors, independent directors, additional, executive, whatever it is, okay, past or present, both. So very good, vast powers are given under section 219. How to carry out the investigation? Under the statutory investigation, that is decided by the section 217 of Companies Act. That is the procedures and powers of inspector. Okay. So it talks about how to carry out the investigation. I will not go much detail for the 217, but yes, this is how 217 is there, 219 is there to support 210, 12, and 30. That is the investigation into the affairs of the company. Now there is one special investigation. That is section 216. Now I'll rewrite it again. I know you are not able to, it's not properly visible. Section 216, which talks about investigation of ownership of company. So when they have to identify the real owners, who is the controlling person, who has the controlling influence on the company, section 216, central government can issue an order for the investigation into the ownership of the company under section 216. And then the investigation will start. Inspector will be appointed. He will follow the procedure of 217. He will have the powers of 219, and accordingly investigation will be carried out. So these are known as the statutory investigations under Companies Act. There are other laws also where the investigation provisions are there, but we will not discuss that as of now. Okay. But there are, for example, SEBI laws and regulations, insurance banking regulation, RBI regulations, a lot of things are there. Okay, where investigation can be carried out. Clear? Any doubt?
Clear, sir.
Okay. Now going to the other type of investigations which are non-statutory. And we have already seen some of the non-statutory investigations. Okay. For example, non-statutory investigation, again I will rewrite you for this. Investigation on behalf of incoming partner. So if an incoming partner is there, he may ask for investigation. Valuation of shares, we have already seen an example on that. Then for, investigation on behalf of bank. Of bank for loan. We have already seen that with an example. Then very important part is investigation of frauds. Fraud investigation. Okay. Then investigation for buying business. This is separate from the due diligence, from buying business. Okay. This is investigation done for a specific matter. An investigation for profitability and feasibility of the business, financial forecast or whatever it is. So these are certain type of investigations, but again, these are non-statutory. The black ones are non-statutory. Okay. Means they are not prescribed by the law. A person can be appointed by any other person to carry out the investigation. Clear? Any doubt?
Yes, sir. Clear, sir.
Clear, sir.
Okay. That was the investigation part we have done in detail. One of the section I just want to take up about the investigation of frauds. Okay. There is a table given on page number 17.42, which divides the type of frauds. Okay. This is fraudulent financial reporting. Basically, frauds are divided in three categories: fraudulent financial reporting, misappropriation of assets, and corruption. So, whenever an investigation for fraud is done, first of all, you need to, as a part of the investigation, you need to identify or assess what is the scope and objective. And in case of fraud, one of the type of fraud will be the objective and scope. So either the fraud can be related to the financial reporting, Either it can be misappropriation of assets or it can be corruption related fraud. So basically, these are the three main categories where the frauds are divided, and you can have multiple number of schemes. This is just example, illustrative list. Can there be additional type of fraud? Yes, absolutely yes. You can have a combination of those. Okay. So the nature and the type and the scheme of the fraud can be different. But majorly they are divided into these three main categories. Plus, there is section, like you already might have seen till now, section 143 of the Companies Act. Okay. And there is a specific subsection under section 143. Okay. Section 143, subsection 12. Okay. Which requires you to reporting of the fraud.
It is a value more than 1 crore to central government.
Yeah. Correct. Yes. Value more than 1 crore. So whenever there is an investigation happening, okay, if it is done by the auditor, then auditor is required to report under section 143, subsection 12 also. Okay. So that is one of the sections that I just wanted to bring your attention to. Then apart from that, yes, there are multiple schemes. I'll not go into the much detail of the schemes because you can have n number of schemes. Okay. Now, the next part that I want to take up here is your forensic accounting. The third part for this particular chapter is your forensic accounting. Now, what is forensic accounting basically? And how it is different from the due diligence, investigation, and audit. See, when I talk about forensic accounting, till now, have we discussed anything that, okay, our report will be gone into the court and it will be presented as a audit evidence or, evidence in the court of law? Answer is no. We never discussed that, okay, what about the report, where the report will go and how the report will be treated in the court of law. The moment you add up that element, that your report, whatever details you are identifying, will be presented in the court of law, and that has to stand in the court of law as the evidence, expert evidence. For that, you have to carry out forensic accounting. The term forensic refers to the suitable for the use in court of law. So when I use the term forensic, that denotes that, okay, whatever I am doing, it should be suitable for use in a court of law. So that, court shouldn't say that, okay, what report is this? I cannot rely on this as an evidence. Take it back. No. Once you do a forensic accounting, you have to make sure that the report should be acceptable in the court of law. That's the forensic accounting investigation or forensic accounting engagement. That you anticipate your report will be used in court. Now, what is an objective of the forensic accounting? The objective of the forensic accounting engagement is to determine happening of a particular event, transaction. Okay. Yes, whether the transaction has occurred, whether the transactions have been there in the books of account or not, or what is the nature, whatever, the engagement can be. But after that, you have to give your opinion, which should be acceptable. Okay. So forensic accounting means you are applying the skill of accounting. You are applying the skill of accounting to gather the evidence which is accepted in court of law. Clear with this? What is the forensic accounting?
It's to detect and prevent and quantify the fraud. Objective, court of law.
Yeah. Okay. Most of people have, a doubt that fraud investigation is a forensic accounting. Fraud investigation is a smaller term. Okay. Forensic accounting is a wider term. Understand? Both are not comparable. You can say it's a subset. Investigation is a subset of forensic accounting, but forensic accounting is a wider term basically. Reason because when I talk about forensic accounting, I may perform the same procedures which are there in the investigation, but there will be additional procedures also so that my report, my investigation, my fraud examination, fraud investigation is acceptable in the court of law. So forensic accounting is a wider term. Okay. And comparing forensic accounting versus fraud investigation versus investigation is not the correct approach. Investigation and fraud investigations can be for, let's say, for example, non-statutory investigation. Are you going to present the report which is prepared for the incoming partner or valuation of shares in the court of law? Answer is no. To present that report, you have to do some additional work. You have to do some additional procedures which is suitable for the court of law. So that's why forensic accounting is a wider term which may include your investigation, fraud investigation, and other type of things. Clear?
Sir, chartered accountants are doing this forensic accounting, due diligence and investigation, or other professionals also can do?
See, again, as I said, forensic accounting is the one where you apply the accounting skill. Now, in the industry, we are the best who has the accounting skill, chartered accountants. Okay. So as a result, we are the best suited for the forensic accounting, investigation, and due diligence. Having said that, can anyone else do it? So again, that depends upon who is ordering forensic accounting, why it is being ordered, and who is appointed as an personnel. It could be and a government officer can be appointed to carry out. Depends upon engagement to engagement. But if the question comes is who is best suited, then chartered accountants.
Yes, sir. Thank you.
Any other questions? Okay. Quick difference between forensic accounting and audit. Again, very big difference. The way you have a difference between investigation and audit, as I said, forensic account is a wider term than investigation. So all the differences you have seen already in the investigation will present over here by default. Okay. So when it comes to the audit, true and fair view, overview of the books of account, general approach, control testing, identification of material misstatement, not all misstatement, but only material misstatement, presumptions, inherent limitations, all these things are there. But when you do a forensic accounting, no presumptions, no materiality, validate full transactions and balances, focus testing to confirm suspicion or allegation. At the end, you have to say yes or no. Okay. Confirm the nature of violation, analysis, fact finding, interviews. It is altogether neutral and at the end present evidence to the court of law. That is a very big difference between the forensic accounting and audit. Okay. Some examples of forensic accounting which can be done. See, most of us talks about forensic accounting only for the purpose of fraud investigation. That is incorrect. No, it's not like that. Forensic accounting is beyond fraud investigation. Okay. Forensic accounting can be for a fraud investigation like financial statement manipulations, but it can be for anti-money laundering. It can be for the related party transactions and valuations, which again will be used. So let's say, for example, there's a dispute between the related parties with respect to some valuation of the transactions. Forensic accounting can be done. Suspicious under IBC, forensic accounting can be done. Fund diversion, asset tracings, yes. Evasion of tax, yes. Valuation, estimation of loss damage, yes. Insurance claims, professional negligence cases, civil litigations, shareholders litigations, yes. All these are the examples where forensic accounting can be done beyond fraud investigation. Okay. So how a forensic accounting is performed? What are the steps to perform the forensic accounting. Number one, initialization. Okay. Initialization, that is, you understand who has appointed you, why you have been appointed, what is the scope, objective, what are the things you need to do, what is the timeline. You understand the whole engagement of the forensic accounting. Number two, you develop the plan. Number three, you obtain the relevant evidence. So you perform. Number four, you do the analysis. Number five, you prepare a report. And number six is the court proceedings. Okay. Initialization, develop the plan, obtain relevant evidence, perform analysis, reporting, and court proceedings. Okay. When I say initialization, that is the objective and scope. Do you find some similarity if I talk about OPPAP? Remember something, this one that we discussed a brief ago?
Yes, sir.
In the investigation also, I'll just go back to that particular part. It was on your page number here. Here it is. No, just a minute.
Yeah, on the investigation we discussed, sir.
Yeah. Point number 8, steps in investigation. OPPAP. Yes. Remember, objective, scope, plan, perform, analysis, and prepare. Yes or no? The steps of investigation. But the moment you add fourth, the one more element to this, that is your court proceedings.
Court proceeding is a unit audit.
That becomes your forensic accounting. This is the additional element over here. Same that I was talking about. Investigation done for the court is your forensic accounting. I also, this is the same with the approach also, process also. Then why it will differ? The only portion it will differ is I have to present my evidence in the court of law. That is the additional point over here. Clear?
Yes, sir.
Any doubt with respect to forensic accounting process?
Sir, is the forensic accounting initiated by the only court proceeding or somebody else, sir?
No. Again, so as I said, forensic accounting can be initiated by not only through court proceeding, but can be, what you can say, can be appointed. Let's say, for example, it's a related party transactions or valuation. They know that later on it will go to the court. They can before order in forensic accounting. Okay, they can hire a forensic accounting person and get it done before even going to the court of law. In arbitrations, mediations, even outside court settlements, this is here. Because tomorrow they know that if something goes wrong, settlement doesn't happen. We will end up in the court, in the litigation. So it is presumed that court proceedings will follow in forensic accounting. So when we talk about forensic accounting, it is by default presumed that court proceedings will follow. Now they are actually being followed or not, that's a different story. Okay. Again, I'll quickly go through the steps like initialization. So real motive, purpose, utility of the assignment. Okay. You do a conflict check that whether, I can take the assignment or not. Step 2, develop the plan. Based on the knowledge gained and the meeting with the client, you develop the methodology, okay, objectives, what are the things you want to achieve. Obtain relevant evidence, location documents, economic information, all things you need to gather. You need to gather as much as, it is possible to gather. Perform the analysis, summarizing, calculation, performing tracing of assets, valuations, regression and sensitivity analysis. A lot of things are done in the analysis, and then the reporting, and then court proceedings. Now, how to write a forensic accounting and investigation report? So, to understand that, I will bring a new concept that you guys might not be aware of. So I will bring the concept of forensic accounting and investigation standards, which is known as FAIS. Now, Institute has already issued multiple FAIS. So this is a list of forensic accounting and investigation standards. Okay. So these are FAIS 110, nature of engagement, 120 fraud risk, 130 laws and regulations, 140 applying hypothesis, 200 series on the standards on engagement management, 300 series on these engagement standards on executing assignments. Then you have a 400 series, you have a 500 series, you have a 600 series. Okay, so these standards are there. Now the question comes is, are you required to learn each and every standard in detail the way you have learned, the way you have gone through the engagement and quality control standards? Answer is no. Okay, to the extent these standards are referred into a study material. For example, we are discussing FAIS 510 over here with respect to the report. Yes, you need to be aware about that particular portion. If we are discussing about some other FAIS, for example, performance, it will be there. So if we are discussing about something about the performance 320, then it is there. It will be there over here, like to that extent. But beyond that, yes, you are not required to go in detail of each and every standard. Whatever is given in your study material, that is fine. Okay. Now, let's talk about reporting. So FAIS 510 deals with the responsibility to issue the written report, which talks about that you should issue a written report because oral report will not be admissible in the court of law. You have to be a written, which should be clear, which should be accurately, reported based on the evidence. Okay. You need to decide what are the contents of your report, format and content. So standard provides a guidance on what things you should enter into a report. Okay. For example, scope, work performed by the professional, limitations, assumptions, disclaimer, facts, evidence gathered. Some of the key elements to your report are title and address or distribution list, to whom the report should be distributed, scope and objective of the assignment, approach, executive summary, reference to use an expert if you have used it, facts of the assignment, list of findings, assumptions and conclusions. So this is how you can, draft your forensic accounting report. These are the certain key elements that you should have. Sorry. You should have in your report. Clear? Any doubt?
Yes, ma'am. No doubts.
Okay. Now let's talk about something more on FAIS. Like how these FAIS are there and how they are structured. See, FAIS basically are divided into, I would say there are 4 critical components or pillar of the framework. One is the basic principles of the forensic accounting and investigation. There is a basic principle document which provides the basic understanding of the forensic accounting and investigation. There are the key concepts. Then there are the standards on forensic accounting and investigation, which are the FAIS. And there is a guidance, additional guidance given. Okay. So your definition, basic principles, key concepts, standards, guidance, and code of ethics, they together make a framework governing the forensic accounting and investigation engagements. And if there is a member of institute who is performing forensic accounting and investigation engagements, he has to comply with this particular framework. Not only the standards, but the whole framework. Okay. So whenever a person who is a member of institute is performing engagement, he has to comply with this. So let's take a quick question on that. Yeah. ABC Limited, a listed company having turnover of 50 crores and plans an expansion by installation of a new machine at the new building having total addition project cost of 20 crores. So this is 10 crores for building, 8.5 for machinery, 1.5 for working capital, total 20 crores. Projects get implemented in 22-23. One of the accountant report to the managing director that some suspicious transactions are noted in the purchase of building material. But the management is confused either where to they should go, they should get an audit or forensic accounting done for the same. Advise management about the difference in forensic accounting and audit. Quickly, what you will write in the answer? Come on, guys. What you will advise to the management? How you will advise? Anyone? No? Okay. So basically, when it comes to the forensic accounting and other auditing, okay, there is a difference given on page number 17.63. Important one. You will tell about this difference. That what is the objective of audit and forensic accounting, the technique used, the period, verification of balance sheet item, how they are considered in both, adverse finding, how they are, provided and there in both. So you will tell about this different to the management, this difference, or you will write this in your answer, and that's it. Clear? Any doubts?
No, sir.
Okay. So that was your chapter number 17. Quick revision with the questions. Any doubt with chapter number 17?
No doubts.
Great. Not an issue. Let's move to the chapter number 15. Overview of audit of public sector undertakings. Very pretty simple chapter. Very, because it's an overview. Understand that this is an overview. We are talking about an overview of the audit of public sector undertakings. Now, what is there in this particular chapter and what we are going to see? Basically, see, when it comes to auditing a PSU, it's altogether a different, unique discipline. Okay, unique area. It's not just about ensuring compliance with the accounting standards. It is about being crucial part, ensuring about the framework that provides that, okay, what are the public funds, how they are being used, what are the intended purpose of the public funds. Okay. The audit of a PSU is direct exercise, which basically, is about the public upholding. That whether the funds that are there for the public or public funds are used appropriately or not. Now, when I talk about a PSU, the term PSU, what it covers. So, can anyone tell me what PSU includes? Anyone? What PSU includes? No? No answers? Pretty much easy. What PSU includes? Okay.
So government companies audit and all.
No, what is the definition of, see, to understand the audit of public sector undertaking, that is PSU, we need to understand what is public sector undertaking first, so that we can go to the audit of public sector undertaking. So what is PSU? Who I can call a PSU?
51% holding of government, more than 51% and more holding by government, that LIC and
Yes.
post office and
discussion.
Yep. Okay. Any other example? Anyone else with some different example or something more to add?
Sir, any entity set up as a separate legal entity and also is having combined control by the state government, central government, or state government alone, or central government having more than 51% of it.
Yes, very good. Appropriately correct. So I divide PSUs in three categories. Number one, that is PSU, which is managed by. Let me just give me a minute. Managed by central government and state government. Okay, or you can say as a department. That will include, let's say, for example, railway, post, okay, etc., other government departments. So, department managed by the governments. Second is your setup under specific act. For example, LIC, unit trust, okay. If there is any other PSU, for example, if there is a separate, for example, SEBI is there, NABARD is there. So a lot of PSUs are there. SIDBI is there.
Yeah, SBI set up with the SBI State Bank of India Act, 1955.
SBI is there. So different corporations set up under this specific acts. Even government departments also. For example, if there's a department like, let's say, IRDA. IRDA is a specific act. So over here. But if it is a telecom department, try. Telecom, again, Telecom Regulatory Authority of India. Okay, again it is. But if the DOT, Department of Telecom.
So can we say ICAI is set up with a separate act?
Yes, absolutely correct. That is also there. So set up under separate act is a PSU. Now, third one is the government companies. Okay, they are set up under deemed government companies set up under companies. Yeah. Under Companies Act. So there is a definition which is given, like which are the government companies. Okay. And accordingly, if they are the government companies, then they will be also called as a PSU. Clear? Any doubt with this? Okay. Now, this is the PSU. We understood the PSU. Very good. What is now we need to understand the audit framework for the PSU. So the audit framework of the PSU, if there is an audit to be carried out for the PSU, that audit will be carried out as per the framework, as per the things, as per the provisions which are specified by the CNAG, Comptroller and Audit General of India. CNAG is appointed by the presidents. There is an article 148 to 151 of Indian Constitution which talks about various things about CNAG. CNAG's appointment, special provisions, removal, powers, duties, audit reports, a lot of things. Plus there is CNAG Duties, Powers and Condition of Service Act. CNAG Duties, Powers and Condition of Service Act. I'll call it, DPS. DPS Act. Okay. So CNAG DPS Act is there. Okay. Which talks about duties, powers and condition of service for the CNAG. Okay. Now, whenever there is an audit happening for the PSU, the auditors are either appointed by the CNAG or are either appointed by some mechanism which is set up by the CNAG. So CNAG is the responsible for the audit of PSUs. Let's say, for example, Companies Act, Section 135 or 143. Okay, under Companies Act, if I talk about Section 143, subsection 5, audit and manner of audit of government companies. So over there, CNAG directs that the manner in which accounts are required to be audited for a government company. An auditor is required to submit the report to an CNAG. Plus, there is 143(6), which talks about supplementary audit. Plus, there is 143(7), which talks about test audit. Okay, so there are provisions which talks about supplementary audit, test audit, or the audit or the manner of the audit under which it is done. There is a section 19A of the CNAG DPC Act, which talks about that the report is required to be laid in the parliament. 19 plus 19A. There are two sections which talks about that reports, audit reports, to be laid in parliament for these PSUs. So section 19 and 19A gives the power to CNAG to lay the report before the parliament. Okay. Section 139 again, if I talk about under Companies Act, 139(7), which talks about first appointment of auditor for government companies. Section 139(5), which talks about subsequent appointment of auditor. For government companies within 180 days from the commencement of financial year. So there are specific provisions for the audit of PSU and that are required to be followed. Are you getting the point? So when I talk about audit of PSU, these specific provisions come into the play. Yes or no? Any doubt? Okay. Now, when I talk about the audit, okay, we understood some of the critical provisions, perfectly fine, very good. Now we need to understand how and what is the nature of audit that is done. The basic element of PSU audit is we need to understand that. The basic element of PSU audit is it's a tri-party or three-party, which is auditor, responsible party, and intended users. Now, who are the intended users? When I talk about tri-party, what is the intended users? See, auditor, understood. Responsible party, basically it's the the party who is making sure that the auditable entities are getting audited. Okay. So you can say auditable entities, or you can say subject matter, who are deciding the subject matter. So these are the responsible party whose audit is being carried out. The second person. Third is the intended users. In the Companies Act, when you are doing the audit is done for the shareholders. They are the intended users. Responsible party is the company and the auditor. But in case of the PSU, intended users are not only the shareholders. There is a public at large who are the intended users. The parliament is the intended users. Government departments audit report are presented in the parliament and it's for the public. So they are the intended users. That's a three-party agreement. Then comes the very important part is the subject matter criteria and subject matter information. Now, what is this? Subject matter, criteria, and subject matter information. Subject matter. Okay. Subject matter is a thing which is being audited. Because in PSU audit, it's not only about the financial statement. Remember that we are not only talking about the financial statement or financial audit, but we are talking about various plans, various schemes, various things which are there by the departments. For example, there is a water irrigation scheme being run by department. There is a scheme which is run for the poor, for the poverty. There's a scheme which is being run by the department, some specific central government or state government department. So that is the subject matter. Criteria. What is the criteria basically? Criteria means the policy, procedure, the expected outcome. For example, there was a policy that government came out with. Okay, we will provide this much housing, affordable housing to the people. Okay, so that was a policy that the government came with. There were plans and procedures which were there that were supposed to be followed. Subject matter is the affordable housing scheme carried out by a state. Okay, state will carry out that affordable housing scheme. They will build the house and they will provide the houses to the people. Now, criteria is the policy that we talked about, the government's plan. Subject matter information is the outcome. Whether, let's say, for example, government says that each state will provide affordable housing to at least 1,000 resident of that particular state. Now, when the audit was done for the affordable housing of a particular state, it was identified that only 100 people were benefited from that. So the outcome that you are seeing, out of 1,000, only 100, we have reached till the target of the 100. That is the subject matter information. Outcome of evaluation or measuring the subject matter against the criteria. When you compare these two, you get the subject matter information. Okay, very important. And third part is the type of engagement. So when the PSU audit is there, the type of engagement is very important. Okay, whether it is the attestation engagement, whether it's a direct reporting. So based on that, it defines like how you will carry out the engagement. Okay. Now, when I talk about this is the PSU audit framework I'm talking about. Now, if I talk about the type of PSU audit, types of PSU audit. So basically, I cover into 4 categories. Okay. One is your financial audit. We all know what is a financial audit. Expression of opinion on the financial statement. Perfectly fine. Second is the compliance audit. I'll explain what is compliance audit. Third is your performance audit. Okay, performance audit. And there is one last type of audit which is known as the comprehensive audit. Yeah. Which is nothing but the combination of all three. Combination of all three. If you add financial, compliance, performance, you will get comprehensive audit. Okay. Now let us see what is quickly compliance audit. And then performance, and then we will see one question on that. Okay. So let's talk about the compliance audit. Now, when I talk about the compliance audit, the independent assessment whether a particular subject matter, when I talk about subject matter, always think of a scheme. And if you want, for an example, you can take for affordable housing. Okay, scheme by a government department. So when given a subject matter, whether that subject matter is in compliance with the criteria. Now, what was the criteria? Criteria was policies, government plan about the affordable housing scheme. So whatever plan and policies they prepared, whether this scheme by the state government or department is complying with the policy or plan or not. That is the compliance audit. Simple. Okay. Compliance audit talks about two things, regularity and proprietary nature. Regularity, that means adherence of the subject matter to the criteria. How frequently? Let's say, for example, schemes are not carried on, just 1 day, 2 day. They are carried on years on year. Every year, every month, schemes are being carried out. So how regularly it is being compliant with the policy or plan. And proprietary means sound financial management. Okay, affordable housing was supposed to be there. Like, in the name of affordable housing, if I provide house of 10 CR to normal individual, that is not an affordable housing. So that is the proprietary nature, whether sound financial management is there or not. Affordable housing means you are providing for 10 lakhs, 20 lakhs, 15 lakhs, 30 lakhs, a particular house. If I give 5 BHK of 10 crores in a prime location under the name of affordable housing, that is not the proprietary thing, that is, or not the appropriate thing to do. So these are the two things which are required to be checked in compliance audit. Pretty much straightforward. Any doubt with the compliance audit? No? Okay, fine.
No doubt, sir.
Okay, great. Now let's talk about, it's pretty similar. When I talk about compliance audit, again, it's an audit. So the procedures and the steps of audits are applicable. For example, you need to plan the audit, you need to perform the audit, evaluate the audit evidence. So planning, performing, evidence gathering, evaluation, and reporting. The way we have seen in any audit, it's the same because at the end it's an audit only. You're not doing something different than audit. Now let's talk about performance audit. Performance audit is based on 3 important pillars. Very, very important. That is economy, effectiveness, and the efficiency. Okay, what these pillars are? When I talk about economy, when I do a performance audit of a particular subject matter or against the criteria, okay, let's say affordable housing scheme. By default, remember that scheme for now. If I talk about performance audit of affordable housing scheme, first I will check the economy. That means, let's say for example, I have to provide the affordable housing. That is a house of 30 lakhs, let's say for example. So economy will refer to what is the cost that government is incurring to build that house. Is it the government incurring 2 crores and giving the house in 30 lakhs? Or is it the government incurring 15 lakhs behind each house? So what is the amount that is being incurred by the government? Whether it is minimum. When I talk about minimization of the cost resources, that is economy. So actually means that by using the minimum resources, I am providing the affordable housing. Second comes the effectiveness. Effectiveness of the scheme. Okay. What is effectiveness? To which extent the objectives are achieved? Like out of 1,000, only 100 people are provided affordable housing. Understanding the reach, understanding the actual impact of the scheme. That is the effectiveness. And efficiency is the input-output ratio. Okay, which basically talks about maximum benefit from minimum cost. That means I can build an house of 30 lakhs also as a affordable housing. I can build an house of 50 lakhs also under affordable housing. But what efficiency I'm choosing? That is very important. I'm choosing 30, I'm choosing 50. I'm choosing a house of 1 CR under affordable housing to provide to the people. So what location I am choosing, whether it is relevant or not. So maximum benefit out of from the minimum cost. In your economy, you only talk about the minimizing the cost of the scheme. But in efficiency, you talk about both maximum benefit also. So when you compare all the three, economy, effectiveness, and efficiency, that is the performance audit of that particular scheme. Clear? Any doubt? Any doubt, guys?
No, sir.
Okay. And comprehensive audit, we have already seen comprehensive. It's a combination of financial, what we know, compliance, we saw, performance, this just now discussed. If you combine all three for a particular scheme, it is the comprehensive audit. Now let's go to some question. There is a question given in the study material. Those are very good. Okay. So that you can understand further on this topic, we'll take up some questions. So, first question, APG and Company, Chartered Accountant Firm, has been appointed by CNAG for performance audit of a sugar industry. What factors should be considered by APG and Company while planning a performance audit of sugar industry? So, what factors you will consider?
So it's economy, efficiency, and effectiveness.
Okay. Yes, very good. What else? Anyone else? What are the steps or factors you will consider in planning the performance audit?
Understanding,
Understanding. Yes, you are correct.
define, plan, perform audit, perform, prepare.
Yes. Okay. Good. I'll tell you. See, here, if you write about planning, performing, evaluating, and everything, that is wrong. Reason because you need to understand what is asked. Asked is about only planning. I'm not talking about performing. I'm not talking about evaluating the results. I'm only talking about factors related to the planning. Always read the question, what is asked. When I have to talk about factors with respect to the planning only, planning, not beyond that. What are the factors that are relevant for the planning?
Sir, we need to understand the entity. What is the
Yes.
object? What is the objective behind of it? How the
Yes.
internal what is the how the internal control is performing? And
So
we need to
yes.
and we need to how the we need to prepare the audit design, audit program, how to question, how to
Yes,
establish the time and resources.
absolutely. Now I'll give you this answer in a terms of audit only. Okay, and then we'll see how it is applicable to performance audit. First of all, let's talk about understanding the entity. Again, I will bring these standards in between for your good understanding. SA 315, yes or no? Although standards are not applicable in this performance audit, but for your understanding, I'm bringing it to you so that you can easily remember. Second, objectives and scope of audit that you already look into. SA 200, determining the audit criteria or
Audit criteria, audit information, that the source that we discussed.
In your normal audit, it is the applicable financial reporting framework. Again, part of SA 200, 210 that you see. Plus 210. Then comes the audit approach. Okay. SA 300. Planning and audit. Developing audit questions. Then team management. You decide what is the team available to you.
And whether the team is adequate skill, competence to perform the audit.
Yes. Correct. You check in SA 210 plus 220. Then you establish the time and resource and plan everything. Like you do the planning and you do the time management or timetable of the audit. Like when what will be done. Again, part of your SA 220 is there plus 300 is there.
Then we need to inform our planning to the audit team, our auditee, the company where we are auditing. We need to inform them.
Yes, intimation. So we already have SA 260. Yes or no? 260 plus 265. So there is an SA. We do it. If I apply these same principles for the performance audit, you will get your answer. See, I'll show you page number 15.21. Understanding the entity and program. Sorry, my mistake. 15.21. Yeah. Understanding entity and program. Defining objectives and scope. Determining audit criteria. Deciding audit approach. Developing audit questions. Assessing audit skills. Audit team skills. Preparing audit design metrics. Now, what is a design metrics? That is something very important to understand. See, when you map, okay, your audit objectives, questions, criteria, evidence, and the method that you will use one by one with each other. That, okay, your objective is to get comfort on this particular assertion or this particular area. So what questions you will ask for that? You will write this. What audit criteria you will compare with? Which policy, which plan, or which point of the plan or policy? What evidence do you need? How you will collect that evidence? When you prepare that in a particular table format, when you prepare that in a matrix format, that becomes your audit design matrix. Okay. Then establishing timetable and intimation of audit program to the audit entities. What we saw for the audit, just now comparing with these standards, the same thing is available for the performance audit. So if you think you have to remember something additionally, answer is no. You already know, you have already read this in your audit. Just apply and tweak it with respect to the performance audit. Yes or no?
That means so only guidelines are given by controller and auditor general, but we have to do same audit factors whichever we are using in auditing.
Yes, see, audit is an audit. At the end, you need to understand that the concepts of audit will not change. Okay. If it is a performance audit, the objective may change. If it is a compliance audit, the objective may change. But at the end, it is an audit only. So the basic fundamentals of the audit of planning, performing, evidence gathering, and reporting will remain the same.
The basic nomenclature will not change. It's the nature of it, audit.
Absolutely correct.
So then when we have to write this economy, efficiency, in which question we have to write this about these points?
Okay. So whenever, basically, for example, let's say in a question, it is being asked what areas you will look for the performance audit. Okay. There you may write that, okay, these are the areas that you will look for the performance audit. Or where you have to explain like what you will do in the compliance audit. What are the objectives of the compliance audit? At that point in time, you will mention about compliance of the subject matter with the applicable criteria. Any doubt?
No, sir.
Any doubt? Simple, just one example I'll show you now. This question, if you see, and we will just see the questions, the last one. Briefly discuss the issues addressed by the performance audit conducted in accordance with the guidelines issued by CNAG. Which are the issues that you address while conducting the performance audit? Simple, your efficiency, economy, and effectiveness.
Yes, sir.
Correct?
Yes, I understand. Yes, yes.
So now, when this is asked, like the issues addressed, that is talking about the objective of the performance audit, and accordingly, you need to write the answer. Clear? Any doubt, guys?
No, sir. Thank you.
Thank you. See, again, whenever you are attempting this particular questions, whenever you are going to answer about the questions, read appropriately. Okay, read it that, like what is asked. Okay, and accordingly try to answer. Okay, so read what is asked in the questions. Very important. And any doubt about chapter number 15, chapter number 17, please ask. Any doubt? Okay, if no doubts, then we have Karuna ma'am with us. Thank you, ma'am.
Hello, hi Harshad. Good morning, students.
Good morning, ma'am.
How are
Good
your
morning.
classes going on? How is your preparation going on? Are you enjoying auditing subject?
Yes, ma'am.
Or little
Yes,
bit worried looking at the paper of May 25 examination?
Enjoying, ma'am.
No, ma'am.
Hope you are preparing your own notes also. I think this is our third class, right? And we have covered audit of bank, NBFCs, then our internal audit, group audit, and today we have covered due diligence, investigation, and forensic accounting, as well as audit of public sector undertakings, right?
Yes, ma'am.
ma'am.
So
Yes,
I
ma'am.
hope you are with us. You are preparing your own notes.
Yes, ma'am. I'm noting down important points.
Great, great. So just like medicine, you need to develop habit that you are writing the notes, and after this you revise it thoroughly and write at least 2 to 3 questions of each topic. And not only writing of the questions, you need to review that also. Because just like audit now, we need to audit our answer also, whether we are giving complete answer, whether we are able to understand the requirement of the question, and we are writing relevant answer. It should not happen that you are not writing complete answer. You are missing some of the part of the question, or you misunderstood the question, or you are writing only little part of the answer, which is required in much more detail, or maybe you are writing in much more detail, which is not at all required. So hopefully you are doing your writing practice, and definitely you are checking and reviewing. So if you are doing it on simultaneous basis, when you will be writing in the examination, your mind will be very careful that yes, in this question I need to write these pointers and this much is required. I need not to write these things. Whether after studying, after learning, whether I'm able to write or not, because sometimes when we write, we are generally forget the points. So writing practice is very, very important and at most important. Right? When we go to doctor, they prescribe medicine now. So if you are having writing practice, you'll be able to complete the paper in the time. Secondly, you will be having reading habit because you are reading the question carefully. And if in case you are missing any of the part, then you will be able to understand that this kind of mistake we generally do in the examination. And when you will be appearing for mock test paper, you can check this, yes, we are on the right track. And in the main examination, our time management will be in best of the manner. We'll be able to write the required and relevant answer and complete answer so that our marks are not get deducted from any point of view, right? Every time when I interact with you, I generally tell you that in the examination you refer some short notes, but please do remember that these 3 pointers or 2 pointers are complete 1 point. So when you are writing in the paper, you need to write complete points. If the question is of 4 marks, you are writing 4 pointers. Please do remember that these 4 pointers are complete point. It should not so happen that your 1 point is segregated into 3 bullets and you are writing in the examination those 3 bullets and 1 more and you are attending only 1.25 marks question. So please be careful for that. Next is whatever we are like, you need to be with us. These are the revision classes. I hope you have covered the whole syllabus once, right? If it is not, then do it with like simultaneously in accordance to the schedule for the classes. You can simultaneously work hard and revise and prepare your notes and do writing practice, right? Because now we are having 70 days duration of the time for exam. Your paper are in September, right? So please do writing practice. In case you find any difficulty, of course, LVRC is there. We are also having open house, that is query resolving session on each and every Wednesday. For auditing, the open house is there 4 to 5, wherein you can interact with us. If you have any doubt in the subject, topic, you can discuss with us. If you are finding any difficulty that why my marks are deducted, what are the mistakes I'm committing. So if you want to discuss anything specifically, that also you can discuss during that query resolving session, right? One more important thing is just like Saransh for standards, you can prepare your own flowcharts, diagrammatic presentation so that you can revise easily and in faster manner. Remember that now the way you are studying, you are preparing for September examination. You need to highlight particular questions, particular notes, particular important pointers, wherein important provisions are given or wherein the major provisions are given and wherein you are finding difficulty. So those questions should be noted at one place. So when you are preparing, revising during those 2 days before the examination, you are able to cover all those pointers. So these are very, very important points. And I hope due diligence, investigation and forensic accounting, you are able to understand the difference. You are able to understand the key features of all these and audit of public sector undertaking. You see this time in multiple choice question also there are certain questions asked from this topic. So please read it carefully, thoroughly. In case still you find any difficulty, you can get back to us. We are having our next session on Saturday and we are going to cover our section 2 and section 4. I hope you all have seen the skill wise and section wise weightage. You all have seen skill wise and section wise weightage?
Yes, ma'am.
So in section 2, we are having our digital audit chapter and in section 4, we are having ESG and SDG chapter, right? For both the chapters, we are having capsule also. And we are going to cover both the chapters in next session on 21st June, right? So be ready for that. If you can study in advance, that will be great. But I will suggest if you study with this with the same flow, like whatever topics are being covered, if you have covered, it will be great. Okay. Try to remember clause numbers, try to remember important provisions. Of course, you can write in your own language, but key words are, of course, required. So do writing practice. And if you have any doubt, any query, you can definitely tell me. Any query? So I think yeah.
No, ma'am. Thank you, ma'am.
Thank you so much. Thank you for patience listening and thank you to Harshad sir. So we'll conclude the session. Definitely we'll be meeting in the next session. In case your doubt is not resolved, you can write on Ask Your Query feature that is available on mobile app. You can use that feature and you can write to us. Okay. With this, thank you, Harshit sir. Thank you, all the participants. Thank you, technical team. And wishing you all the best, Bita, for your preparation. Thank you.
Thank you, ma'am.
Thank you, ma'am. Thank you, sir.
Yeah,
Thank you, sir.
we can continue. Same to you.